అజయ్ చూడు ఒకసారి లైవ్ వస్తుందా లేదా? ఇక్కడ క్లోజ్ అయింది సరాగ్. లైవ్ స్టార్ట్ అయిందా? వెరీ గుడ్ ఆఫ్టర్నూన్ టు ఆల్ ఆఫ్ యూ. Yes, very good afternoon to all of you. Yes, Tanuja, Gomati, Rajkumar, Mahandesh, Rahul, Fatima, all of you, very good afternoon. Okay, shall we start? Yes. So now we are going to discuss whatever that MCQs are given by the ICMA in a MCQ bank. Okay. Some of the MCQs are already same as it is like a June exam, but they are added some MCQs. But anyhow, we can discuss every MCQs from the list. Okay. First one, section 115JB, every taxpayer, what is it? Section 115JB, every taxpayer being in company is liable to pay MAT if the income tax payable on the total income computed as per the provisions of income tax. So nothing but simply in this MCQ they are asking the what is it? MAT rate, minimum alternative tax rate they are asking. Yes, any idea? Simply 15%. Yes, so generally for company we have to check the tax as per normal provisions, tax as per normal provisions. Yes, super. And we have to compute the MAT. So MAT means nothing but the book profit into 15%. Whichever is, we have to take higher. Whichever is higher. So nothing but here, how to calculate book profit we can discuss. But what is that rate we have to apply it on book profit? Ma? Yes, 15%. Whatever that higher we can get, for that we have to add the health and education cess and surcharge. Next, MAT shall not be applicable for the, yes, remember, for insurance companies, MAT shall not be applicable. That too, for life insurance companies, yes, MAT is not applicable. Remaining like fire insurance, marine, business related, for remaining insurance related, yes, it is applicable. For life insurance companies only, MAT not applicable. Next, so book profit for the purpose of 115JB, we have to take the net profit. For the net profit, we have to do some adjustments. Whatever that adjustment given in the explanation 1 to section 115JB. Section 115JB. Remember, for which net profit we have to do that adjustments, ultimately we can get book profit. But these adjustments given in limited adjustments are not unlimited. Whatever that adjustment given in explanation 1 to section 115JB, that only we have to do. But for which net profit we have to do? Yes, now MAT applicable for what? Company. So nothing but for companies we have to prepare the net profit and yes, balance sheet as per schedule 3. From that profit and loss account, yes, we have to take the net profit. Yes, enough ma. Next, one more MCQ. Every company to whom MAT provisions are applicable required to obtain the report from the chartered accountant. So nothing but suppose one company required to pay the tax by using the minimum alternative tax concept, they are required to obtain the one report from the chartered accountant. That report format number, remember MCQ form number 29B, important in our MQPs also this MCQ we have. Next, I think already we discussed what are the adjustments we have to do. Whatever the adjustments given in explanation 1 to section 115 JB, we have to do as an adjustment. Finally, we will get the book profit. So one of the adjustment now they are asking, while computing the book profit under section 115 JB, what is the adjustment we have to do? Remember ma, in less items we discussed this adjustment. Yes, lower of the brought forward business loss or unabsorbed depreciation, whichever is lower. Suppose my last 3 years brought forward loss is 10 lakh. Last 3 years or 4 years unabsorbed depreciation 6 lakh. This is a brought forward loss, it is an unabsorbed depreciation. Whichever is lower, 6 lakh. This is only we have to reduce from the net profit for computing the book profit. But remember, these two figures we have to take from the as per books of account, not as per income tax return, as per books of accounts. Yes, that is only here they are given. Done. Next, what is the due date for the filing of return of income? If an assessee required to furnish the report under form number 3CEB under section 92E, simply if any assessee entered into international transactions or specified domestic transactions, they are required to file the one report from the CA is form 3CEB. For those assessees, what is the due date? Yes, due date is 30th November of assessment year. Next, which of the following things can be carried forward? Yes, even if return filed after due date. Wait. Give me 1 minute time, right? Yes, now you can check it out whether audio is clear or not. I think whoever facing the issue, please give me confirmation. Yes, okay. Now remember, which one of the following losses we can carry forward even if return filed after the due date? Yes. Can you tell me? That means here we file the belated return. We file the what ma? Belated return. That is section 139 subsection 4. In case of belated return, which of the losses we can carry forward? Remember, even if return filed after due date. even if return filed after due date, we can carry forward the unabsorbed depreciation, house property losses. Yes, but now what is that? Unabsorbed depreciation we can carry forward. Next, can you tell me which of the following returns we can revise under section 139 subsection 5? Can you tell me all the returns? That means original return, yes, belated return, yes, revised return, any one of the return also no problem. Now we can revise. Now they are asking the section number. What is the section number for scrutiny assessment? 143.3 section dealing with the scrutiny assessment. Next, SSE paid the advance tax more than the required. That means nothing but whatever the tax we are required to pay, but we paid the more than that, so that's why you will get that amount as a refund. Can you tell me at the time of getting the refund, what is that interest? Section 244A. Yes, we can get the interest on refund. Yes, interest on refund. So what is that rate we can take for computing interest under section 244A? What is that? 0.5% per month or part of the month. 0.5% per month or part of the month. Next, any mistake, 11th one, any mistake which is apparent from the record in order passed by the assessing officer. Can you tell me now? Two types of rectifications we have. Remember, yes, if any order passed by the AO, in that order, if any mistake which is apparent on the record, we have to use section 154. If any order passed by the ITAT, in that if any mistake which is apparent on record, we have to use section 254. But in this question, they are mentioning about order passed by AO, in that mistake is there. Which section? 154. What is the section? 154. Now, next MCQ, very important. Repeatedly they are asking based on 154. Okay, AO passed an order, in that mistake is there. Now I am an SSC. So now I am asking for rectification. By way of filing an application, I'm seeking for rectification. Now income tax authority means nothing but AO, CIT, any other authority can pass the rectification order or refuse the rectification related. Yes sir, our application whatever we made, that can be that can be accepted or refused also. But what is the time limit? Remember, 6 months. 6 months from the end of the month in which the application is received, not application sent. Okay, example, under section 154, now I want rectification for the one order. Now I made an application. Yes, 5 days after that they received. Whenever they received that application from that month end, within 6 months they need to give a communication about, yes, whether they are going to do the rectification or they are rejecting our application. Next, can you tell me what is that form number we have to use for filing in appeal before the Commissioner of Income Tax? Can you tell me what? 35. Form number 35 can be used for the filing of an appeal before Commissioner of Income Tax. Now one more, number 35, before Commissioner of Income Tax 35, before ITAT 36. Don't confuse regarding this. Next, yes, 14th one, Joint Commissioner of Income Tax is an first appellate authority. Joint Commissioner of Income Tax, Commissioner of Income Tax, ITAT. Next, High Court, Supreme Court. Now advance ruling provisions is important. Remember, section 245 only, but starting from 245 N to ending with the 245V. So starting and ending section you have to remember. Advance ruling provisions are starting with the 245 and ending with the 245V. Next, memorandum of cross objections related. Yes, nothing but in front of an ITAT, if you remember, yes, suppose I'm an SSC, I'm making a complaint against the department in front of ITAT. So who made a complaint? Ma? SSC. Now we can seek and reply from the department. Yes, department can file the memorandum of cross objections within 30 days in form number 36A. Suppose vice versa you can take, if that applicant is a department, so now ITAT can seek the memorandum of cross objections from the SSC also. Next, question number 17, revision under section 264. Revision under section 264. Remember, revision under section 264 has initiated by the SSC. Now can you tell me, initiated by SSC means nothing but SSC want a revision under section 264. First of all, please let me know what is a 264 revision? Revision of order in favor of whom? SSC or department? SSC. Now in favor of the SSC revision required to be done, who made an application? SSC only made an application. Can you tell me? Now they are asking the within how much time we are required to make an application. How within how many years? Within 1 year from the date of order. From the date of order. Next, prosecution can be launched on the taxpayer. Why? Why? Remember, if he commits willful failure to produce the books before tax authorities, books and documents. Can you tell me under which sections we can demand the books and documents? 142 subsection 1. Under section 142 subsection 1, department can ask the books and documents and assets and liabilities related information if an SSC is willfully defaulted while submitting this information. Yes, definitely the prosecution can be launched. Next, question number 19. If a person fails to submit the PAN, if a person fails to submit the PAN, yes, then what is that penalty can be levied? So, penalty levied under section 272B. But how much of quantity of penalty? Rupees 10,000 for each default. Rupees 10,000 for each default. If you know that answer, please try to type that A or B or C or whatever it may be. Next, one more. Now here I will tell you. A limited is there, okay, and B limited. Just we are purchasing 20 lakh goods from the B limited, but it isn't fake. So just we passed in fake entry. Because of the fictitious purchases, what happened, ma? In the hands of A limited, there is an under reporting of income. There is an under reporting of income. Because of under reporting of income, yes, we have to pay penalty under section 270A. But who given the help to the A limited for doing under reporting? Yes, sir. Remember, who given the help to the A limited? B. So a person caused to pass and false entry. Yes, sir. A person, yes, sir, given help to pass and pass entry or omission of an entry. Yes, now he is required to pay the penalty under section 271 AD. 271 AD. How much amount of penalty, ma? Whatever that amount involved in the transaction, that amount and you have to pay as an penalty. Such amount equal to aggregate of such false or omitted entry, that is only you have to pay it as an penalty. Yes, I think whoever saying the option C, ma, maybe you are thinking it is a transfer pricing 92D records failure related penalty, or saying this is not at all that MCQ. Please check properly. Next question number, ma, how much penalty, ma? 100% of the amount involved in the transaction. Question number 21. Ma, this is a very repeated MCQs they are given in that exam. Please check it out. Amount of income in respect of penalty imposed or imposable if that penalty exceeds any idea? 5 lakh. Remember 5 lakh point. If the penalty already imposed on SSE, if that is exceeds 5 lakh, yes, now reducing or waiver of the penalty under 273A shall be made by Principal Commissioner of Income Tax, Commissioner of Income Tax, yes sir, except with the previous approval of, yes sir, with the previous approval of PCCIT or CCIT or PCCIT or DCIT. Simple, right? Penalties related MCQ. Ma'am, if the penalty is just below 5 lakh, these authorities have a power to reduce the penalty or power to give a waiver for that penalty. Suppose if the penalty amount is more than 5 lakh, these authorities can pass order, no, whose approval they are required to take, higher authorities approval they are required to take. Remember this point, generally for all the penalties, these authorities can give the waiver or reduction of penalty only if that amount of penalty is less than 5 lakh. If the penalty amount more than 5 lakh, whose support they are required to take, PCIT or CIT required to take the permission from their higher authorities. Next, ma'am, that is only PCIT, next CIT can give the penalty related immunity or relief under two sections, ma, 273A and next one 273AA. Now I will interconnect these two MCQs. Which authorities have an power? PCIT, CIT. If the penalty amount less than 5 lakh, directly they can give grant of immunity or penalty. Sorry, immunity, grant of immunity as well as what, ma? Reducing as well as waiving. More than 5 lakh, these authorities doesn't have any power, so that's why they have to take the permission from the higher authorities. Next, ma, in case of amalgamation, suppose A Limited is there, A Limited closing row, why? That is acquired by the B Limited. Whatever the loss in the hands of A Limited, maybe we carry forward this loss already 4 years. But what is that provision applicable in this case? Yes, please treat that loss as an, yes sir, please treat that loss as an in the year in which amalgamation take place, and yes, you can carry forward, that means B Limited can carry forward that loss for the fresh period of how many years? 8 assessment years. Sir, already we carry forward business loss for 4 years, no problem. Yes, that loss already carry forward for 4 years also. Previous year 24-25 amalgamation happened. That loss just arisen in this year. That assumption we have to follow, and we have to carry forward for how many fresh assessment years? 8 years. In case of restructuring depreciation, what we have to do? In case of restructuring means what are the things? Amalgamation. In case of restructuring means what, ma? Amalgamation, demerger, Sole proprietorship concern converted into company. Next, partnership firm converted into company. My last one, private company or public company. Public means unlisted public company converted into LLP. In all the cases, depreciation we have to apportion between the predecessor and the successor based on the number of days they used that assets. That is nothing but usage ratio. Next, the countries are employ explicit policies designed to attract the international trade oriented activities by way of minimization of taxes or reduction or elimination of other restrictions. That areas are called as, or that countries are called as, important. In India we are classifying one area. In that area, if any non-resident started their businesses, we are not at all levying taxes, or minimum taxes only we are going to collect. And next point, there is no restrictions also. That areas we can call it as an tax havens. What is that? Tax havens. So tax haven means simply we can define in one more way. In that area, no taxes or low taxes. No taxes or low taxes. A is using a motor car for personal purpose but charged as an what? Business expenditure. Can you tell me, we are using for personal purpose, but in our books of accounts we are recorded it as an expenditure, as that is used for business or profession. It is called as what? Tax evasion, falsification of records. CBDT stands for, it is a very big MCQ. Can you tell me what? Central Board of Direct Tax. Next, section 130. If you observe that section 130, we have an income tax authorities chapter, section 116 to 130 we discussed in this chapter. Now they are asking the last section number heading. Yes, jurisdiction of income tax authorities generally. Yes, we have in section 120. Jurisdiction of income tax authorities 120. Now 130 is nothing but faceless jurisdiction of income tax authorities. Now 120 is jurisdiction of IT authorities. Jurisdiction of IT authorities. Yes. Now faceless jurisdiction related section number. Yes, that is an 130. Now it is also important MCQs from the liabilities in special cases. Section 178. Who required to intimate the tax authorities? Liquidator. Okay, I will tell you. If the company is going for liquidation, we have to sell the assets. That means liquidator required to sell the asset, and they has to settle the liabilities of the company. Now for this procedure, first if any liquidator appointed, first the liquidator required to intimate to whom? Tax authorities. Important. Once liquidator appointed, that liquidator required to intimate to the tax authorities. With the permission of tax authorities only he can sell his as company asset, and he can discharge the liabilities of the company. Now section 165, equalization levy. I think you know, if that, yes sir, if the specified services related consideration, if that exceeds rupees 1 lakh, threshold limit 1 lakh, we have to deduct the equalization levy at the rate of 6%. ICDS 8 deals with the, yes securities. ICDS name and numbers also you can expect as an MCQ. ICDS are applicable for the only two heads of incomes, PCBP and income from other sources. In this MCQ they are given only PCBP, so that's why we have to take what? PCBP. Now Block Money Act is applicable to the whole of India. Whole of India. Super. Next, wait a minute, Now, what is the rate of tax in that block money act? 30%. Remember, ma, don't add any. Yes, clarification videos I will give one by one. Yes. What is that, ma? 30%. Here, don't add any surcharge and health and education cess. They are given just 30%. That's enough. 30% that enough. And which one of the following is an progressive based nature tax? What is that, ma? Income tax. Ra. What do you mean by the progressive nature? Ra? If your income increases, the tax liability also will increase. That is only called as a progressive nature. And one more thing we can say, if there is a difference between the clear difference between yes rich and poor is there, yes, that is only called as what, ma? Progressive based nature. Next, which one of the following is not tax saving investment? Ma, for this ATC is available. For this also ATC is available. For this also ATC is available. Ma, in some cases, fixed deposit maintained with the scheduled bank for minimum period of 5 years, ATC is available. But out of these options, yes, for these ATC is not available because of incomplete information. Next, normally if any employer deducted the tax, yes, if any employer deducted the tax details, how much amount deducted and all the things will be given by the employer to employee in one form number. What is the form number? You know already in practical cases, form number 16. Form number 16. Anna, if you are sending question marks also, what I need to do? Already I told I will do the clarification videos. Okay, last in 2 videos also I given an explanation. Okay, just listen. And this is an outdated MCQ. As now we have a long term capital gain. Generally 112A also, 112 also, 112A also, 112 also. Okay, now 12.5%. It is an outdated MCQ. Previously, yes, maybe what is it? Percentage of the tax on that long term capital gain, the security is 10% may be there, but this is an outdated MCQ. You can ignore easily, ma. Next, there is an updated return related. Can you tell me, if you are not filed the return or if you are already filed the return, if you want to file the updated return? Yes sir, if you want to file the updated return, can you tell me within how many months, ma? From the end of the relevant assessment year, within 24 months you can file the updated return. So from the end of the relevant assessment year, suppose I want to file the updated return for the assessment year 23-24. Okay, 31st March 2024, your relevant assessment year ending. Yes, within how many months, ma? 24 months. I will not stop monetization, ra. You can take YouTube Premium. Thank you. I don't want to stop any monetization, ra. And you can take YouTube Premium. I don't want to stop monetization. Thank you. Yes, ma, minimum alternative tax, nothing but what is that MAT rate? So what is that MAT rate, ma? 15%, you know already. But when it will be applicable? If any company is paying the zero tax or no tax. Generally, company having the many deductions, yes, based on the deductions, yes, as per the normal provisions of the Income Tax Act 1961, they are not at all paying the even minimum tax also. So that's why we created the MAT provision. Minimum at least we want to collect as a tax in case of companies. Next, how many years we can carry forward the AMT credit as well as MAT credit also? 15 years. How many years? 15 years. Next, if the recipient of income does not furnish the PAN, suppose I want to deduct the TDS. Now, definitely I need an PAN number of an payee. Payee is not submitted the PAN number. Now I have to deduct the TDS at the rate of what ma? 20%, not 15 ma. Please, what is that? Okay, you are saying earlier MCQ. Okay, sorry. 20% is we have to apply in case of TDS. Next, what is the charging section of capital gain ma? There must be an capital asset. If that capital asset is transferred, we are required to calculate the capital gain in the year of transfer. In the year of transfer. Now what is that answer? All the above. Next, what is the maximum amount of gift? What is the maximum amount of exemption of gift from the non-relative? 50,000. Suppose if I am receiving 55,000 from non-relative, 55,000 is taxable. Remember, if I am receiving the gift from non-relative 55,000, that is more than 50,000. So that's why entire 55,000 is taxable in the hands of recipient of gift under income from other source. Next, what is the last date of filing of return of income of an individual? Yes, in case of individual, assumption there is no tax audit, 31st July of an assessment year. Return filed after the due date is called as an belated return under section 139(4). Sole proprietor is liable to pay the tax. Can you tell me? Many are trying to take 30, known as slab rates. Sole proprietors are required to pay tax at the rate of slab rates. Capital asset excludes, remember, first thing capital asset excludes stock in trade. Next, personal effects, agricultural land in India, but that isn't rural agriculture land. Okay, rural agriculture land. Can you tell me, these three are excludes, jewelry is nothing but includes to the capital asset. Jewelry is nothing but what ma? Includes to the capital asset. Sir, if you have a long-term capital loss, you can set up the long-term capital loss against the long-term capital gain only. ICDS 6 deals with the revenue, ICDS 6 ma? 4. Any idea? Revenue recognition. So now inventories ma 2, construction ma 3. Next, if any advance tax installments are deferred, under which section we have to calculate interest to the default? C. For filing of income tax return for various entities, how many types of due dates are there? 3 due dates: 31st 7, 31st October, 30th November. 30th November. So return of a company can be verified by, can you tell me, Hura? Managing director. If managing director is not available, director. Generally company, irrespective of the profits or irrespective of the losses, even zero income also they are required to file the return of income. But in this case they are getting the loss. So now what is the due date for filing of return of income for companies? 31st October. Yes ma, for companies the loss return, loss also, normally also, definitely the mandatorily they are required to file the return of income. But what is the due date? 31st October. Next MCQ, Ram received 51,000, more than threshold limit of 50,000, but it is received on the occasion of marriage. That's why what is that? Exempt. Entire 51,000 is exempt from tax. Now, what is the TDS on rental? So now in this section, in this MCQ we have to use 194I. Yes sir. What is the TDS rate on plant and machinery or equipment? 2%. In case of others, 10%. Done. Next, lottery related 10,000 amount winning is there. So lotteries related we have an 194B. If threshold limit 10,000 exceeds, then we are required to apply TDS at the rate of 30%. Here threshold limit 10,000. It does not exceed 10,000. So that's why no need to deduct the TDS under this section. What is the threshold limit, ma? Exactly 10,000. If that more than 10,000, yes, we can deduct. Now, so this question you have to do the marginal relief. Yes, marginal relief. Sorry, we can use here. Marginal relief. Sir, how you know about marginal relief? Because for domestic company, 10 crore is an surcharge related basic limit. So nothing but 1 crore, 10 crore is an basic limits for surcharge. More than that basic limit, just we earned 1 lakh only. So that's why here we have to apply the concept of surcharge. Sorry, marginal relief. Step 1, tax on total income. Yes, we have to calculate tax on 10 crore 1 lakh. Can you tell me what is the tax rate for the domestic company? Here clearly they are saying of the previous year 21-22 turnover does not exceed 400 crore. So that's why we can apply just 25%. What is the surcharge rate? The total income is more than the, yes sir, 10 crore ma, 12%. Ma, please calculate and tell me. I think we can get 2 crore 80 lakh 28,000. Step 2, tax on basic limit. In this question, what is that basic limit including surcharge? Tax on basic limit including surcharge, but income over basic limits. Income over basic limit. Can you tell me what is the basic limit? 1 crore. 25, sorry, 10 crore, sorry. 25% of that 10 crore. Plus now 10 crore related surcharge, can you tell me how much ma? 7% only. For this we have to add the over and above surcharge basic limit. We have an 1 lakh only. Tell me total. If I added 1 lakh also, I will get 2 crore 68 lakh 50,000. Ma'am, step 3, marginal relief. Yes, now remember, SSC have an capability to pay this amount, but they are asking this, so that's why we can provide the marginal relief. When you can get the marginal relief, if step 1 is more than step 2, what is that marginal relief you can calculate? Yes, 280 28,000 minus 268 50,000. Yes ma'am, 1 crore 17 lakh, sorry, 11 lakh, sorry, 11 lakh 78,000. Yes, step 4, tax liability. Step 2 minus step 3 plus health and education cess, but without adding health and education cess, they given the answer 2 crore 68 lakh 50,000. If you add health and education cess, there is no answer, so that's why we also go with the same thing B, without adding that health and education cess. This is only the tax liability. Ma, understood? Next, which one of the following cases we are not required to file the return of income under section 139? Ma, company mandatorily required to file. Okay, if any person having that basic age 66 years, okay, generally what is that gross total income, ma? please add these two, that is a more than basic exemption limit, and foreign travel expenditure more than 2 lakh. In all the cases they are required to file the return. But remember, in this case, if any resident and ordinary resident having the asset in an outside India, but here in this case they mentioned what are non-resident, or if non-resident having the assets outside India, or if you having any bank account outside India, no problem, they are not required to file return of income. Who required to file the return of income? If resident and ordinary resident having the asset outside India, or if any bank account outside India, in this case they are not required to file return of income. Next, one more thing, trust related. If any trust, so nothing but they are running a medical shop, that business receipts is more than 20% of total receipts. Now, so nothing but the trust having the business now. Whether trust can claim the application based exemption. That means if any amount used for the trust purposes shall we get exemption. Remember, you have to check if any business income is there. First we have to check whether that business income is ancillary or miscellaneous to the or incidental to the trust objective. Sir, I want to achieve that objective of the trust only, but if I am running this business, then only I can achieve the objectives of the trust, nothing but the main objective or incidental. Now for this business or profession you are required to maintain the you are required to maintain the books of accounts. You are required to maintain the books of accounts separately for the whatever the business you are running, medical shop. Yes, now you will get an exemption. Trust also can do business. Example, some trust they are running the schools. In their school they can run canteen also, they can run stationery shop also, but that business is incidental to main objective, and if we are maintaining the books of accounts separately, yes, you can get the exemption. Done. Next, yes, section 91 deals with the, can you tell me, unilateral relief. India always entered into DTAA by using which model? UN model. Sir, remember 92C is deals with the how to compute the arm's length price. Remember, in transfer pricing section numbers also important. Now one more thing, if any international transaction, specified domestic transaction is there, that all the transactions refer who required to file the return of income. I think you are asking a doubt. So who not mandatorily to file return, so they are required to file. This person is also required to file. This person is also required to file. In these three cases definitely they are required to file return. That's why that is not a correct answer. In last case, if they are given the resident and ordinary resident, if any resident and ordinary resident having the asset outside India, and next if they are having bank account, yes, they are required to maintain, they are required to file return, but in this case they are given non-resident. Example, Trump non-resident, they are having assets in outside India, they are required to file return in India, not required. Simple example. Okay. Now, sir, if any international transaction or specified domestic transaction is there, that transaction must be carried out with an arm's length price. That is only section 92. International transactions, specified domestic transactions are required to carried out at an arm's length price. That content is given in section 92. Now we are going to discuss 92D, maintenance of documents. Under transfer pricing chapter, maintenance of documents. if you have failed to maintain the document, you have to pay the penalty under section 271AA, that is on 2% of transaction, that may be specified domestic or international transaction. 92E, CA report you have to submit. Yes, if you are unable to submit that thing, you have to pay the penalty under section 271 AB, that is a fixed penalty 1 lakh. Or out of these two, in any attempt you can get at least one MCQ. Paka. Now they are asking failure to furnish the information, that is nothing but what more, failures to furnish the information on documents. 92D failed. Which penalty ma? 271 AA. What is that quantum? 2% of value of transaction. As per section 94B, can you tell me if any interest paid to the our associated enterprise, that interest paid amount is restricted with the 30% of EBI TDA while computing the PCBP. Next, advance pricing agreement is valid for how many years ma? 5 years. Arm's length price can be determined by using the resale price ma. These are not at all methods for computing arm's length price. Now, remember, provisions of section 92 will apply. 92 means nothing but what ma? We have to apply the arm's length price. For specified domestic transaction, when we can apply the section 92 ma? Specified domestic transaction given in section 92BA, if the transaction value is more than 20 crore during the previous year, then only we can apply section 92 for those transactions. Uncontrollable transaction means the transaction entered between the enterprises, these are other than associated, then only that is what ma? Uncontrolled. Between the associated enterprise, if any transaction is there, that is uncontrolled transaction. Next, can you tell me whatever that information we are required to maintain under section 92D with respect to the specified domestic transaction or international transactions, how many years we have to keep that records ma? From the end of the relevant assessment years, how many years ma? 8 years. Now 92D section related records we are failed to maintain, then we have to levy the penalty. Can you tell me here? These two options are similar. You have to select ma? You have to select 2% of the value of international transaction plus specified domestic transactions, that is only penalty. Next, GAAR provisions are applicable from the assessment year 18-19 ma. So that's why 1/4/2018 onwards GAAR provisions are applicable. Yes, GAAR provisions are applicable if the tax benefit yes sir, in that transactions entered by the enterprises, if that exceeds 3 crores, then only we can apply the GAAR provisions. Two enterprises are treated as and deemed to be associated enterprise when more than 26% of voting power in the other enterprise. Remember, 26 are less, not correct. 25, not correct. 26 or more, that is only correct. That means you have to check more than or equal to 26%. Now, voting power means, can you tell me, we have to held in that equity shares ma? Not in preference shares, not in convertible, not in non-convertible debenture. Yes, voting power means we have to held the other company equity shares more than or equal to 26%. Next, two enterprises are deemed to be associated enterprise. Yes, can you tell me when the loan related point, loan advanced point they are given. Can you tell me if you given the loan that covering the more than or equal to 51% of the book value of the total assets of that enterprise, I given loan, but that loan and their assets, if I am comparing, my loan is only, yes sir, my loan covering the how much percentage of their assets? 51% or more. Simply, if I am asking the repayment, they have to sell how much quantity of assets? 51% or more of that assets they have to sell. Now, debt point, okay, guarantee related point, yes, more than or equal to 10% we have to check. So, can you tell me which case we can take? Yes, I think C point is correct. Please check. Both are associated enterprise. Why incorporation given the guarantee 50 crores on behalf of Zero India? Why? So 500 crores amount, guarantee 10% of debt. So 10% means 50. Two enterprise shall be treated as deemed to be associated enterprise. Can you tell me raw material point ma? Yes, we have to check the more than or equal to 90% of the raw material we are taken from the one person. That person and who are receiving the raw material both are treated as an deemed associated enterprises. Okay, international transaction means in transfer pricing. Yes, if any transaction between the two associated enterprises, at least one of the associated enterprises non-resident, at least, that means nothing but which one is correct ma? Either one only or both are non-resident. Yes, that's okay. That's why answer. Yeah, all of you done. Next, international transaction shall be in a nature of. But just I want to know one thing, whether you are following the speed or shall I decrease the speed. So because these are the basic things we are already covered in number of questions and important concepts whatever we have in particular chapters, that only they framed as an MCQs. That's why I am going in an speed only. Definitely if you felt it as an difficult to understood, yes, you can ask. And one more thing, if you are unable to follow any MCQ, yes, you can ask. Up to now, I think within 1 hour we can close. Next, international transaction shall be in a nature of any. International transaction may be purchase, sale, leasing, let out, yes, borrowing, lending of money, etc. Again, they are combining to the 92D records. If you are failure to maintain, you have to pay the penalty under section 271A. What is the penalty ma? 2% of value of international transaction or specified domestic transaction. Remember, for which you are not keeping the documents. Now I will ask a question. Yes, our entity A Limited entered into international transaction 50 crore. How much ma? International transaction 50 crore. Out of which 10 crore related, we are not maintaining the 92D records. Now 2% we are required to be applied on 50 crores or 10 crores ma? Documents we are not kept for how much amount? 10 crore. Yes sir, 10 crore. Yes, please check. You have to apply this 2% on what ma? 10 crore. GAAR applicability they given Dina. Which MCQ, Satvika? MCQ number I want. I have key. Yes, please give me confirmation about the MCQ number ma. Otherwise we can continue. I think GAAR related MCQs 73 and 74 only we have. Okay. I don't know what is that. Okay, if you have an clarity, yes, please message. Now, must specified domestic transaction, can you tell me 92 BA? What is that specified domestic transactions ma? 92 DA. When we can call that transactions as an specified domestic transactions ma? 73 1/4/2018 only. In my key I have an 1/4/2018 and in our material also we have an 1/4/2018 only ma. Please check key correct. I think now I have an key in my hand also, I verified. Please check. Correct only ma, 1/4/2018. Okay. Specified domestic transactions. Can you tell me when you can call these transactions as a specified domestic transactions ma? Under section 92 BA, yes, if the transaction aggregate value during this year exceeds 20 crore, then you can apply 92 for that transaction. 92 means nothing but we have to carry out the transactions with the arm's length price. Now, order of the transfer pricing officer should follow by binded over on whom AO, because AO only will give the reference to TPO. Definitely TPO order required to be followed by the AO. Now, important please listen. Secondary adjustment. What is that ma? Secondary adjustment means what? Already you know primary adjustment means whatever that ALP you applied. So because of the ALP, total income can be increased. Total income can be increased. That is only primary adjustment. If any primary adjustment is done, if that primary adjustment amount involved is more than 1 crore, we have to do the secondary adjustment. Can you tell me what is that objective behind doing the secondary adjustment ma? Yes, we have to remove the imbalance between the actual profit, because we increased the profit by using the primary adjustment, right? Total income increased, loss decreased. Automatically we have to balance this actual profit with the actual cash in our accounts. So that's why we have to repatriate the amount from our associated enterprise. It is simply required to be done in the books only. Yes, but primary adjustment we have to done with respect to the tax payment. But it is just you have to do within your books. Can you tell me, in order to remove the imbalances between the cash as well as what more profit, actual profit. Remove the imbalances or make the consistency of what ma? Actual profits and the cash. That is only the correct answer. Next, secondary adjustment shall be made when the primary adjustment to the transfer price. Important. Yourself you done the primary adjustment in your return of income. Yes, you have to do secondary adjustment. Now, remember, in this case, AO done primary adjustment means nothing but ALP computed by the AO, but SSE not accepted. SSE not accepted means maybe he go for an appeal. So that's why in this case primary adjustment is not at all possible. How we can do secondary adjustment? Remember, in this case, AO increased the total income by applying the ALP. But SSE accepted or not accepted that adjustment? Not accepted. So that's why we can go for an appeal, etc. That's why your primary adjustment is not done and secondary adjustment is also not done. And if anything is determined by the TPO also, we can't do any secondary adjustment. Secondary adjustment only can done in these cases only, yes, if it is primarily sorry, so modally done by the whom, SSC. Understood? And if you want to check, I will give you an easy lines for this. We can check transfer pricing chapter. Exact lines I will give you from our concept book. Just 1 minute time. My first, so modally done. Second one, AO, but AO calculated the arm's length price, but here SSC accepted. In our MCQ, what they are given, not accepted. APA okay, safe harbor rules okay, DTAA okay. But TPO, can you tell me, is there any TPO? If any transfer pricing officer computed, transfer pricing officer can compute ALP, that will be forwarded to AO only. There is no such point. That's why, can you tell me, based on that, what is that answer? Only A. Next, secondary adjustment related interest rate. If the international transaction denominated in Indian currency, please take the 1 year lending rate of SBI, plus we have to add the 3.25 SR rate as an adjustment. If the transaction denominated in foreign currency, yes, we have to take the 6 months LIBOR rate. 6 months LIBOR rate, that is nothing but what, 30th September, and we have to add what, 3%. Advance pricing agreement is valid for the 5 consecutive years. Next, CBDT can declare the advance pricing agreement as an void ab initio in only one case, if that void ab initio, if that advance pricing agreement is entered into by the both the parties because of an SSC submitted the fraud or misrepresentation of facts. In such a case, even though they given an advance pricing agreement also, we can declare it as an what, void. Free filing consultation in advance pricing agreement, it is in first stage. In advance pricing agreement, it is in first stage. Yes, if you want to enter into advance pricing agreement with your tax authorities, it is in first stage. That means we are just doing an inquiry. After taking the free filing consultation, maybe you can file an application with the help of this fee. Otherwise, we can drop from APA also. That means if I am taking the free filing consultation from the department, means do I need to enter APA mandatorily? No, it is my option. I am taking the benefits. Just I am inquiring about the APA, whether it is useful for me or not. Just it is an inquiry. So now based on this, we can write the answer. Pre-filing consultation means it shall not bind the CBDT or applicant to initiate the APA process. Yes, it is an absolutely correct. Why? Just I am taking the consultation with the department. If I am taking the consultation, yes, both the parties like CBDT as well as taxpayer, no need to enter into APA. Next, it is an optional for a person. Maybe it is an unleading to file an APA. Whether I am taking forwarding steps or I can drop also, that is also correct. But it is a completely wrong point they given. It shall be deemed to imply that person applied the for APA. Can you tell me, if I am taking the free filing consultation, do I need to enter into that APA mandatorily? No. So that means, can you tell me which options are correct? A and C are correct. Yes, can you tell me? B is completely wrong. Now, section 92 CD means nothing but if APA entered within APA entered month ending within next 3 months, we have to file the modified returns. Can you tell me, if 92E record related CA report not submitted, then we have to pay the penalty under section 271 AB. What is that? 1 lakh fixed penalty. GAAR stands for General Anti-Avoidance Rules. GAAR stands for what? General Anti-Avoidance Rules. Divya, here question is void ab initio. Void ab initio means invalid from beginning. In these cases, change in law or change in facts, okay, not applicable if any facts or things are changed. But in this case, it is void from beginning itself. Two things are different, ma. Understood? Here they are asking in which case it shall be void from beginning itself. Next, tax haven means already we discussed, ma. Where there is no taxes or low taxes. Next, what is it? Secondary adjustment. Ma, secondary adjustment means nothing but what, ma? We have to repatriate that amount to the India. But if you are not done, no problem. Now you have an option to pay the tax, additional income tax by using 20.9664. What is the secondary adjustment section, ma? 92E. Sorry, 92C. Next, some amount 15,000 arising in country B, to which India has DTAA. So it is taxed in the hands of Kabir as well as Amini. So this is an instance of, can you tell me, suppose if Indian company is there earning the profits that pay the tax in India. Now they are distributing the same as an dividend to the foreign shareholders, USA. Now in the hands of shareholders, again that amount is what, more tax. Okay, remember this is only called as economic double taxation. Simply one amount taxed in India and taxed in other country also, but in the hands of same person or different persons, different person. Now in the hands of different means Kabir as well as Amini. It is called as what, ma? Economic double taxation. Judicial double taxation means Mr. A only paying the tax on the same income in India as well as foreign. That means in one person hands only if double taxation arises, that is a judicial double taxation. Within the hands of different persons, if double taxation arises, that is an economic double taxation. Can you tell me, in our example, in one country it is taxed in the hands of one person, in another country it is taxed in the hands of another person. Yes, now it is an economic double taxation. In order to prevent the economic double taxation, we have an mutual agreement procedure, not DTAA. We have an mutual agreement procedures. Okay, that is also similar to DTAA. Answer this one. Madana, transfer pricing provision shall not be applied when, if that is resulting in reduction of tax. Yes, definitely in this case transfer pricing provisions will not apply. Second, if it is increasing tax, definitely it will apply. It is increasing expenditure, if expenditure increases, automatically tax will reduce. In these two cases, arm's length price we cannot apply. So that's why transfer pricing provisions also will not apply. Both A and C. Do you have any doubt in this point? Please ask with me if you have any doubts in 98. Can you tell me? Because of an arm's length price, if tax increased or total income increased, then only we can apply the ALP and we can apply the transfer pricing provision. In first option, tax reduced, we can't apply ALP. Second, yes, tax increased, no problem. Third one, expenditure increased. If an expenditure increase, income will decrease and tax also will decrease. Next. Anonymous donations related. Important 115 BBC of an Income Tax Act 1961. Yes, very important. Taxability of anonymous donations. Can you tell me how much amount of anonymous donations we are receiving here? 8 lakh. Out of that anonymous donations, we have to reduce something. First, 5% of total donations. 5% of total donations are statutory limit rupees 1 lakh, whichever is higher. But total donations in this question, how much ma? 30 lakh. 30 lakh into 5%. Please compute and tell me ma. 1,50,000, right? 1,50,000 or here 1 lakh. Whichever is higher. Whichever is higher. 1,50,000. Now we can reduce, and this is an 6,50,000. Out of this anonymous donation 8 lakh, this is an taxable at the rate of 30% under section 115 BBC, and this is an taxable along with the other income of a trust by using normal tax rate. Now what is that question they asked? Which of these income is taxable at the rate of 30%? How much ma? 6,50,000. You have to remember this. So nothing but anonymous donation, how much we received. Out of that anonymous donation, whichever is less, we can take it as deduction. 5% of total donations are statutory limit 1 lakh, whichever is higher. Many students are ignoring this, and this isn't taxable at 30, that's okay, but this is also taxable by using the normal tax rates. Dana. Next, ma'am, generally search conducted. In search, these are the following items are seized. Following items are found. So out of this, which cannot be seized under 132, we can't seize the jewelry because he is doing the jewelry business. That's why jewelry is stock in trade for him. Next, we have to discuss 101 MCQ. This is in section 80M. Yes, intercorporate dividend related deduction, chapter 6M. So now here you have to check the dividend received or dividend distributed on or before due date. Yes, whichever is lower. Ma, what is a dividend distributed? 105 lakh. But dividend paid, they are given as an, dividend distributed to shareholders, this is an, and dividend received, they are given the net of TDS. So that's why, can you tell me what is that gross amount? Yes, simply 99 lakh is representing the 90%. How much is 100%? So that is nothing but we are doing grossing up. If you are doing the grossing up, I think we are going to get the 110 lakh is a dividend received in gross. Yes, what is the dividend we distributed? 105 lakh, whichever is lower, 105 lakh is an answer. And some students are asking as a doubt also, this is 44B. Yes, non-resident engaged in the operation of ships. So now whatever that income we received, yes, this income, yes, are received, yes, at a Mumbai port. Remember, these amounts always we have to include the demurrage charges as well as handling charges. This is an 85 lakh, 5 lakh plus 2 lakh. And one more, some more amount is received in India. So that's why if anything is received in India, we have to include on this. This is an freight amount. Sir, entire freight is an income? No. Yes, sir. Entire freight is an income? No, ma. On that freight, please apply 7.5%. How much we have to apply? 7.5%. Then you will get an income. Now 44B is saying that out of your amount of freight, 7.5% is straight away income. So that's why you can't reduce this expenditure of 35 lakh from Dasra. So directly of this freight, yes, how much we have to apply? Ra? Yes, please apply 7.5%. Yes, this is your income. On this income, we can pay the tax because they are asking the tax liability. They are asking rounding off also into 35% plus health and education says why 35 foreign company 35% is yes. After doing the rounding off, you will get an amount of this. I think how much you will get? I will check. 85 plus 5 plus 2 plus 50 into 7.5% into 35% plus 4% into 1 lakh. Yes, exactly you will get in 660. Now this is an important. Royalty amount received by a foreign company from an Indian concern, agreement also entered. So now royalty amount in case of foreign company, we have to check 44 DA or section 115 A. 44 DA, if this foreign company having the PE, then we can apply. Can you tell me in this question, is there any foreign company having PE in India? Through that PE they are provided the services, when then we are receiving the royalty, they are saying anything? No. So that's why you can't apply 44 DA here. So now you can apply the 115 A. What is that 115 ma? So there is no PE, nothing but foreign company is providing the services to Indian company directly from that foreign only. There is no permanent establishment in India. So that's why what is the tax rate we can apply? Yes, the 10 lakh into yes 20% plus 4%. Answer is 2,08,000. Yes, in case if yours in case in your suggested answers if they are given as an this, ignore previously 10% rate. Now you have to take this. Previously 10% is, now you have to take 20%. And some students can ask also, sir, I think you don't know assessment of various entities chapter, sir. We have in section 115 BBF. 115 BBF. Sir, if any royalty income, yes, just 10% of tax plus 4%, sir. If that royalty income on patents, that if that patent also registered in India, then only you can apply this. In this case, they are not saying anything about the royalty income from patent, but patent is registered in India. They are not saying anything. That's why you can't apply this. And which section is suitable? 115A is only suitable as per section 115A. Yes, you have to apply the yes 20% plus 4%. Done. Maybe you can ask, sir, why you are not applying the 44 DA? If PE is there, from that PE only foreign company provided the services to the Indian concern, then Indian concern is given the royalty, then you can apply 44 DA. In this question they are not saying anything about PE. There is no PE in India, so that's why you can apply 115A. Dana. Yes, next. So they are asking the yes simply depreciation. They are asking simply depreciation. But it is an entered, this entity is engaged in the manufacturing business. So that's why they can get the additional depreciation also. And one more thing, they purchased a new plant and machinery on 15th July. That means put to use more than 180 days. They purchased another plant and machinery, new plant and machinery in December. So that's why put to use less than 180 days. Out of this next purchase, 10 lakh is in second hand. One thing you have to remember, if it is a second hand plant and machinery, we can get normal depreciation, but we can't get additional depreciation. Now you have to check the additional depreciation as well as normal depreciation computation ma. So first we can get the normal depreciation. Can you tell me normal depreciation we can get first if an asset is purchased on, yes, I think if that asset is purchased on the 15th July, so that's why you can get the full depreciation. And one more asset that worth 50 lakh we purchased on the December month, that's why you can take the 50% only. Why 50% put to use is here more than 180 days, here less than what ma 180 days. Now additional depreciation we can calculate. So this is a new one entirely. We can get additional depreciation fully. But next, yes, we purchased 50 lakh thing, but out of that second hand is there. So that's why we can't take the second hand and plant and machinery related additional depreciation. Please reduce. You can claim only on what ma 40 only. Next, what is the rate? 10%. Why ma? Here put to use more than 180 days. Here put to use less than 180 days. Suppose come all together normal depreciation 4,50,000 plus 3,75,000, 8,25,000 you can get. Next, yes, you will get a 10 lakh additional depreciation, totally 18,25,000. Ma, are you understood ra? These are all our new assets. That's why we are going to calculate the, yes, that to new plant and machinery. So that's why we can get the additional depreciation also. Ma, understood? I think this is an 18,25,000. Next, ma, foreign institutional investor or qualified investor invested in the municipal debt securities. So now here 5 lakh is amount is payable. What is a TDS? Remember here we have to apply the 194 LD TDS. Yes sir, 194 LD TDS. Now whoever issued the municipal debt securities while paying the interest on that municipal debt securities to the FII or QFI, they are required to deduct the TDS at the rate of 5% plus surcharge plus health and education cess. Can you tell me 5 lakh into, yes, it is an 5% plus I think we added the health and education cess. 5 lakh into, yes, 5% plus 4%, how much ma? 26,000. Done. Next, ma, they are asking the first one SSC related return selected for scrutiny assessment. Now we want to file the, yes sir, now we want to file the scrutiny assessment related notice under 143(2). Yes, now please check the, yes, can you tell me what is the time limit ma? Return filed year ending. What is that return filed year? 2024-25. Return filed year ending, it is nothing but 26. Yes sir, correct only, 25-26. From this, yes, within how many months ma? 3 months. That is 30th 6 upon 2026. Return the file year ending within how many months ma? 3 months. AO can send the notice for scrutiny assessment. Now rounding off of the tax amount for calculating the interest. Sir, nothing but rounding off of tax in respect of which we how to calculate interest. That amount should be rounded off to not nearest, lowest. Please change it. Lowest multiple of 100. Suppose on some amount we have to calculate interest. That amount we have to round it off to lowest multiples of 100. Now the computer purchased on this date and we installed in an office. Remember, the depreciation how much? If it is installed in an office, we can't get the additional depreciation. normal depreciation we can get. What is that? Computers depreciation rate of 40%. But here put to use less than 180 days. So that's why you can get only depreciation 1,60,000. Madana. It is also important CMA enter exam MCQ. Previously I purchased a laptop with the 50,000 amount. I use it for personal purpose. Now I'm brought this laptop into, I brought it on my laptop into what purposes? For business purposes. On that date, what is that value? 40,000. But we know section 43 section saying that some special cases, suppose if any personal asset brought into your business, yes, at cost only you have to brought in your WDV format, you have to record for 50,000. This fair market value is irrelevant. In case of building, yes, from this cost you can reduce the notional depreciation. This is not a building. For building only they are given a chance of giving the notional depreciation, but now you can't reduce anything, 50,000 only, on which you can calculate the depreciation. Rate of depreciation also they are saying what? 40%. Done. 40% means how much amount you can get? 20,000. Put to use more than nothing but, and one more thing, many students are, suppose it is purchased in which year? 22-23. It is purchased in which year? 22-23. In this year we brought in. Here many students are applying put to use more than 180 days. Suppose it is given in December, what we have to do? Can you apply 50%? No. Why? It is old asset. If you purchased asset during this year and put to use less than 180 days, then only you can apply reduced depreciation. Remember, it is an old asset. There is no reduced depreciation. That is nothing but 50%. Are we purchased earlier year? This is an old asset. So that's why we can take always full depreciation. Understood? Next. And many students are asking this MCQ. Shall we start? And before starting this MCQ, if any SFC other than company, if they claimed chapter 6A deduction under heading C, that is 80 IA to 80 RRB, and section 10 AA, section 35 AD, mandatorily that SSC required to check whether AMT is required to apply or not. Here we have to apply the 80 IA. Why? The option to shift out from default means nothing but normal only. So that's why you can take 80 IA. In such a case, automatically you have to check whether AMT provisions will apply or not. Whether AMT provisions will apply or not, immediately you have to check. Okay. First, as per normal provisions, what is the tax we are required to pay? As per normal provisions, what is the tax we are required to pay? Can you tell me? Normal provisions means 52 lakh is an business income. Out of that, you can take 35 lakh. Out of that business income, you have to reduce the deduction under section 80 IA, full amount 35 lakh. What is that amount? 75 lakh. Normal tax rate if you applied 0 to 2.5 lakh, 2.5 lakh to 5 lakh. That is only you have to check, because that is used for personal purpose. In business, at the time of brought into that, they are given explanation to section 43 at what value we have to record in our books. That is nothing but clearly given in our explanation. For buildings only, you have to reduce the notional depreciation. For other assets, you can't reduce any amount. That is clearly given in our PCBP concept book also. You can check it out, ma. 2.5 lakh to 5 lakh, 5 lakh to ayyo. Yes, you can calculate the tax liability on 17 lakh, ma. Yes, 5 lakh to 10 lakh, 10 lakh to 17 lakh. So nothing but here 0, 5%, 20% and 30% you can apply. Please tell me how much you will get, ma. 3,22,500 plus for this if you added the 4% you will get an 3,35,400. Many are correcting the answer based on this, no. For this you have to apply the AMT because AMT means alternative minimum tax. In this case, please calculate the adjusted total income. What is the total income? 17 lakh. For this, whatever the deduction you got, please add it. Yes, you will get an adjusted total income of how much? 52 lakh. Adjusted total income, please calculate 52 lakh. If that adjusted total income is more than 20 lakh, definitely AMT concept is applicable. If AMT concept is applicable on that adjusted total income, what is the tax rate, ma? Remember, yes, 18.5%, ma. AMT rate is 15%. AMT rate is, sorry, MAT rate is 15%, AMT rate is 18.5%, and if you calculate it, you will get 9,62,000. Now, plus, now surcharge you have to add at the rate of 10%. Why? This is only our total income. Deemed to treat as an total income 52 lakh. 50 lakh exceeds 10%. Yes, if you added the surcharge, I think you will get an 10 lakh 58,200 and you have to add the 4% of health and education cess. Ultimately, you will get an 11 lakh 528. That is rounded off to 11 lakh 530. Yes, whichever is higher, this one minimum you have to pay, whichever is higher. So that's why answer 11 lakh 530. Dana. Sorry. Next. Ma'am, individual given an advertisement for selling of his house property, ma. Remember that amount also more than 1 lakh. So will 165 is applicable here? No. Why, sir? Remember, sir, here we are taking the services from the non-resident. For business or profession, then we can deduct the equalization levy. But here for personal purpose, selling of house property related advertisement we are taken. So that's why no need to levy the equalization levy. But here equalization levy threshold limit they are asking 1 lakh. But now here, can you tell me, this is towards the online digital advertisement charges we are paying. So 5 lakh into, yes, you can apply the 6%. That is nothing but how much, ma? 30,000. Understood? Yes. Next one. GAAR is applicable if the transaction value related tax effect or exceeds how much, more 3 crore. What is the time limit for passing of the order by the TPO? This also framing is wrong, ma. TPO always have a time limit. Assessment completion, whatever that assessment completion, yes, nothing but AO required to complete the assessment, ma. Now we are given the reference to TPO. Yes, AO having the limited time. So before completion of an assessment, TPO required to give a reply. Or TPO required to pass an order definitely before passing the assessment. If this time limit is less than 60 days, they are adding the 60 days time limit. That provision only we have. There is no mandatory time limit for giving the order by the TPO. TPO always required to give the support to the AO before completion of an assessment itself. If this fellow given the order, that will be helpful for assessment order. So now we are giving the one support to the TPO. If this time limit for completion of an assessment is less than 60 days, yes, you can take another extra 60 days. That type of MCQs you have, and this is a completely incorrect MCQ. This is a completely incorrect MCQ. There is no specific time limit for passing the TPO order. TPO always required to pass the order before the assessment, before the completion of assessment. Suppose 10 days only available, nothing but within these 10 days AO required to pass the assessment order. Now TPO haven't 10 days, that is less than 60 days. So that's why we can give the extension of time limit of how many days? 60 days. Next, and nothing but depreciation. I think manufacturing of leather products. We purchase the plant and machinery, but it is installed in guest houses. That's why additional depreciation not available. 12 lakh, yes, 25%, yes, subsidy received. 9 lakh, 9 lakh into 15%, and we purchased in December, means that is put to use less than 180 days. Yes, can you calculate? 9 lakh into, yes, 15% into 50%, that is in 67,500. Next, question number 117. In this also many students are doing the mistake. Please remember, Subhaman is last year turnover 80 lakh. Sorry, before that year, last year only. We are in the previous year 24-25. Last year turnover below the what? 1 crore. Now Subhaman paid the 3 lakh salary and 61 lakh commission. 2 payments he paid. For these 2 payments, he is not at all deducted the TDS. No problem. Okay. Now for this salary, 192 will apply. For this salary, 192 will apply. Then what about the commission? 194H will not apply, because payor is special case we discussed. Special case means what? Any person other than individual or HF. If he is an individual or HF, last year turnover or gross receipts exceeds 1 crore. 194H does not apply. But one more provision is there. If any person not covered under 194C, 194H, 194J, for him we have an 194M. 194M is applicable. Under 194M, yes, remember threshold limit also 50 lakh, that is exceeded. Yes, definitely we have to deduct the TDS. Are many also doing the mistake in this? Please tell me, TDS we have to deduct by using 192 in case of salary. Second one, 194H not applicable, but 194M is applicable. Then TDS required to deduct under these two, but he is not at all deducted. What is that consequence? We have to disallow. If that amount paid to non-resident 100% disallowance, if that amount paid to the resident 30% disallowance, here only twist is there. This disallowance is not applicable for salary. Even though I am making the payment of the salary to my employees without deducting the TDS, disallowance will not attract under section 40A subsection 1A. That means, yes, 61 lakh you made without deducting the TDS, to this only we can apply the disallowance. 61 lakh into 30%, directly this amount we have to disallow. Clearly I need to explain, clearly I want to tell you one thing. In this case, Shubham required to deduct the TDS under both the things.
Here 192, here 194M. He is not at all deducted TDS. But the disallowance under section 40, the payment excluding salary, other than salaries related, whatever amount you are, whatever that amount on which you are not deducted the TDS, on that only we have to apply the disallowance at the rate of 30%. Understood? Now, which model of DTAA India will follow? UN model. Here also 80M MCQ. What is that? Deduction with respect to intercorporate dividends. Remember, what is a dividend we distributed? 130 lakh. What is a dividend we received from the domestic company? 108 is an TDS after this. This is a 90%. What is that 100%? Please tell me. 108 into 100 divided by 90, 120. Yes, along with this 120, yes, we received the one more dividend from the foreign company. Yes, whichever is lower, dividend received, dividend distributed, whichever is lower, 130 lakhs. Next, if there is no DTAA, unilateral relief. And one more MCQ, past examinations related. As of now, yes, in the morally limited, yes, we are required to pay the unpaid amount of an interest 200 lakh. Unpaid amount of interest. All of the sudden, bank given an offer, yes, sir, we are converted this unpaid amount of interest to the debentures. Here, that means automatically you have to invest, but no need to invest because we want to pay 200 lakhs to you. So we are changing the 200 lakhs as an unpaid interest to the debentures. Okay, bank also said okay. Can you tell me, this isn't treated as an actually paid under section 43B? Can we take this as a deduction? No. 43B actual payment means actually if you are paying to that outsiders, that is only treated as an actual payment. Conversion of an unpaid interest to the debentures, conversion of unpaid interest to that fresh loans, conversion of unpaid interest to the, yes, the deposits that cannot be treated as an not actual payment, we can't give any deduction. Now factory building, and they are asking additional depreciation. Can you tell me, additional depreciation only available on new plant and machinery, not on the buildings? That's why answer is what? Nil. That too. Next, carbon credits related. Yes, if any carbon credit, yes, we have to follow the 115 BB0 at the rate of 10%. Plus 4% health and education cess. Now answer is 20 lakh into, yes, now 20 lakh into 10% plus 4%. Income tax tribunal, yes sir, nothing but can rectify its mistake in its own order if that mistake which is an apparent on the record. Next, important, Amit is a property dealer. Property dealer means he is doing business, remember. Now he is selling the, yes, stamp for selling the flat for 2.6 crores. What is that SDV? 3 crores. For property dealer, if he is selling something, which head of income will attract PCBP? While computing PCBP, sale consideration minus cost. Cost already they given. Amit purchased 2 years back or 1.5 years back at 2 crores. What is the sale value we have to take? Here for sale value we have to apply section 43CA. Maybe you don't know that 43CA, I will tell you. Yes sir. Now we have to compare the stamp duty value and 110% of actual consideration. Stamp duty value 3 crore and 110% of actual consideration. 110% of actual consideration, that is 2.6 into, yes sir, 110%, that is 2.86 crores. Simply you are selling less than the stamp duty value. You are selling what ma? Less than the stamp duty value intentionally. Many are taken the less sale consideration. That's why minimum here as per section 43 CA, which value you have to take as an consideration for computing PCBP? 3 crore. That is only 43 CA saying that. Now 1 crore is an business income where we have an option. All are 1 crore, but here 1 crore is business income. Here also 1 crore business income, remaining are wrong options. Property dealer means regularly he is selling and purchasing the properties only. That's why PCBP. Now opposite party, can you tell me 3 crores worth of thing they are taken for 2.6 only. That's why maybe that is a gift. We have to check. My immovable property is taken for the inadequate consideration. Immovable property is taken for inadequate consideration. Value of benefit, can you tell me what is that value of benefit ma? 3 crores worth he got it for a 2.6 crores only. That is an 40 lakh. That is exceeding the higher of the two things. First one, 10% of actual consideration, that is an 26 lakh or 50,000, whichever is higher. Can you tell me? 26 lakh. Ma, remember we are taking a benefit is more than 26 lakh. That's why what is the taxable value ma? 46 lakh is taxable. Sorry, 40 lakh is taxable. Answer C is correct. Ma, remember if any person selling the same thing, yes, nothing but he is selling the property, PCBP income. For him we have to apply the section 43A for calculating the sale consideration, 43 CA. Now who are receiving the gift, yes, we have to tax that amount under income from other source. Immovable property, inadequate consideration, we have to check the value of benefit is exceeds the higher of the following: 10% of actual consideration or yes 50,000, whichever is higher. Now one more. Here we have to check. I think one student asked this doubt also. I think few minutes before. Unit holder, business trust, SPV. SPV given the special purpose vehicle means Indian company. Indian company given the dividend. In the hands of business trust, it is completely exempt. Why? They are not holding this dividend amount. They are going to distribute to the yes unit holders. In the hands of unit holders, it is exempt. Yes, ma. In the hands of unit holders, it is exempt or taxable, ma. It is exempt, and it is in other case it isn't taxable. When it is exempt, when it is taxable, I will tell you. Ma'am, if this SPV, if this SPV opted the 115 BAA, if SPV opted the 115 BAA, can you tell me it is taxable? If SPV opted the normal tax rates, in the hands of unit holders, the dividend amount is exempt. Remember, clearly they are saying, exempt in the hands of business trust, REIT, Real Estate Investment Trust. Exempt only if they are not opted the 115 BEA. 115 BEA not opted means normal, exempt. In the hands of whom? Unit holders. If SPV opted the 115 BA, in the hands of unit holders, that is taxable. Yes, in the business trust first chart itself you can find these words also. Now, why exempt? Because they are not enjoying anything, they are giving the pass on credit only. Pass on credit to the unit holders. Now, Surya is aggrieved by the order passed by the CIT. CIT given the one order, but we are not interested to follow that order. Now, is there any remedy available? Yes. Is there any remedy available? Yes, we can make an appeal to the ITIT. Okay. Options, these two are, three are correct. Now, within how many days? Remember the 60 also not correct, 2 months after amendment, that is in 2 months. So what is the correct answer? Option 2 is correct. 2 months before, that is in 60 days, after amendment, that is in 2 months. Now remember here same thing, country B and India, that is taxable in the hands of same amount. This amount is taxed in these two countries in the hands of two different person. It is an economic double taxation. How we can provide the relief towards the economic double taxation by way of mutual agreement procedure. 143.2 notice is issued for completing the assessment under section 143.3. What is that completion of assessment under section 143.3? 12 months from the end of the relevant assessment year. 12 months from the end of the relevant assessment year. Here they are given the individual SSC. Remember, this is an presumptive taxation under section 44BBB is applicable only for foreign companies. Okay, but here SSC is an individual, so that's why can you tell me presumptive taxation is not applicable. Presumptive taxation provisions are not applicable for that any one of the SSC. Who is that last one? Definitely students will not at all remember this small point. Foreign company, non-resident individual. Is a non-resident individual. Can you tell me for whom this provision is only applicable? If you are in foreign company? So that's why can you tell me in our Vivek case which presumptive taxation provision he can't take? 44BBB. That is nothing but civil construction connection with the turnkey project. Already we discussed this MCQ already, but now we can detailedly discuss about this. Can you tell me fake purchases related thing? Yes. A Limited and A and Co, X and Co, we are taken a support of purchases. How much? 7 lakh. But can you tell me it is a fake purchase or genuine? Fake purchase. Now because of the fake purchase, how much under reporting income? Under reporting income 7 lakh. What is our tax? 7 lakh into A and Co, not limited, Co, addition partnership firm. Yes, 30% plus 4% health and education says. Yes, can you tell me what is that? 7 lakh into 30%, 7 lakh into 30% plus 4%. Yes, how much? 2,18,400. Yes, it is a misreporting case. Yes, 200% you can apply. What is that? 200% you can apply. Correct, na? 7 lakh into 30% plus 4%. Sorry. Here they are given the ignore health and education cess. Ignore health and education cess. They given this. So that's why into directly 200%. Why 200? In case of misreporting, as directly we have to apply 270 penalty tax at the rate of 200%. In case of normal, 50% is of tax. Next, X Limited is giving the help. So that's why here section 271 AAD will apply, not B. AAD will apply. Amount equal to the transaction. Can you tell me what is that amount equal to the transaction? 7 lakh. What is that amount equal to the transaction? That is in 7 lakh. Now, yes, penalties is under these ways. This is only. And now one more thing. False entry passed by both the parties, right? Yes. Again 271 AAD we have to apply, and here also we can add 7 lakh. This is a twist. Remember A and Co, this is an 1 and next this is, and X we have to pay at 7 lakh. Next, can you tell me survey conducted, Can you tell me survey conducted? With permission, without permission of the higher authorities, AO can retain the books of accounts up to how many days, 15, exclusive of what, holidays. 15 exclusive of what, holidays. Next, section 143 subsection 1. Which one of the following we can't adjust while doing the processing of return of income? These two are one and the same. Yes, these two are what, one and the same. Done. Give me 1 minute. Next, arithmetical errors we can adjust. If any mistake apparent from the records, yes we can. But these two things, 26 AS records related, if any income reflected in 26 AS that is not reflected in return, we can adjust. No, under section 143 subsection 1 we can't adjust that one. Next, Kamal employed with the one company. What is the rent paid by this person? 50,000. Now which TDS provision is applicable here? 194 I or IB? IB. What is that? 194 IB. Can you tell me what is that 194 IB? If a person other than covered under 194I, in 194I who covered? Yes, ma. Other than individual or HUF, other than individual or HUF, individual or HUF, individual or HUF who having the turnover or gross receipts more than 1 crore or 50 lakh in the last year. Now 194I. Yes, if tenant paying the rent, if tenant is other than individual or HUF, if he is an individual or HUF, okay, other than individual or HUF, if he is an individual or HUF, turnover or gross receipts, turnover in case of more than 1 crore, more than 50 lakh in case of gross receipts in the last year, who are not covered, nothing but Kamal is not covered in 194I. Why? He is an individual or HUF. Turnover gross receipts not applicable. He is a salaried employee. So that's why which provision we can apply, for him 194 IB is there. If he is paying the rent 50,000 or more part of the month or full month. For month, if he paid the 50,000 or more, then we can deduct the TDS. Then we can deduct the what, TDS. But unfortunately, unfortunately, here he is paying just 50,000. That is not exceeding the threshold limit. So that's why there is no requirement to deduct the TDS. There is no requirement to deduct the TDS. Done. Now, this is a question. Remember, ma'am, who given the advance ruling? Board of Advance Ruling Authority given the advance ruling. As an SSE, we are not satisfied with the advance ruling authority given order. Now, what is the remedy for him? No problem. Advance ruling authority or board of advance ruling given the order, if you are disagreed, you can make an appeal to the High Court directly. First, they are given the time limit of 60 days and time limit extension also available another 60 days. Directly you can go with the what, High Court. Under section 37 is nothing but not at all given the deduction related to any CSR expenditure. Yes, section 37 is not at all given the expenditure incurred with respect to the CSR. Remember why they are not given, ma? That expenditure must be related to business or profession. It is not related to business or profession. As one statute, Companies Act 2013 saying that, that's why you are incurring this amount. So it is not at all related to business or profession. That's why section 37 is given the disallowance. So that's why there is no deduction. But you can get other chapter 6A deductions for this same. Done. Yes, next. Which one of the following is not a transaction based method? Which one of the following is not a transaction based method? Ma, we have a different ALP computation method. So now some of the methods are transaction based. Ma, one is an cup method, another one is an cost plus method, another one is an resale price method. Yes, another one is what, ma? Resale price method. These are transaction based method. Next, some are profit based methods are there. Profit split method, transaction net margin method. Now they are asking which of the following is not a transaction based. Answer, profit split method. Now virtual digital assets related MCQ they given. Can you tell me what is that virtual digital asset related TDS provision is applicable, ma? 194S is applicable. TDS at the rate of 1%. Threshold limits are 50,000 and 10,000 is there in different cases. But in our case, what is that, ma? Excluding GST or commission, threshold limit is 7,20,000. On that, if you applied the 1%, can you tell me what is that, ma? 7,20,000 into 1%. Yes, you will get in 7,200, right? Okay, not 72,000, 7,200. Done. Next, cooperative society 115 BAE tax rate they are asking 15% plus 10% plus 4%. It is 17.16. On this 22,50,000 if you applied, you will get in 3,86,100. And now I'm changing the answer. Yes, sir. I think in our MCQ revision series, I given the different answer for these MCQs. Now for this MCQ, now I'm changing my answer. Please listen carefully. Please listen carefully. Again I am saying, yes. Now he acquired the property on this date. AO identified on this date. AO sent notice on this date. How much value is already disclosed, ma? 60%. It is allowed as deduction. How much is taxable? 40%. Okay. What is that? Fair market value. We have to take. Ma, fair market value. Yes, sir. Generally, okay, to be honest, I don't want to agree. But always they are given the same thing. Same answer. Not in 1 or 2 or 3 or resources also. They are following the same thing. Remember, fair market value on the first day of previous year, first day of the previous year, fair market value as on the first day of the previous year in which AO sent notice. So can you tell me AO sent the notice in which year? Previous year 25-26. What is that first day? 1/4/2025. This is only answer. Ma, in earlier I given the yes, nothing but he comes to the notice first day of the previous year. That is, in my view, still that is correct. But the remaining all the faculties also saying this, and ICMAI also given the suggested answers also in this way only. I think in June 24 this MCQ came. Again we can get this MCQ. We don't want to lose the marks. We have to keep the answer in line with this only. In revision series also I given the different answer. But please follow this. Nothing but whenever they send the notice, under section 10. For assessment under section 10, they will send the notice. Whenever they are sending the notice for that year, for that previous year, whatever the first day of the previous year is there, on that date fair market value only we have to take. Berry ratio means nothing but gross profit divided by operating expenditure. Gross profit divided by operating expenditure. Now, in order to avoid the secondary adjustment under section 92CE, what is that additional income tax we are required to pay? 300 lakh into, yes ma, 20.9664 percentage. How much amount it will be? I think 62 lakh 89,920. Which one of the following orders is not applicable before CIT? Last one ma, dispute resolution panel under section 144C. In this dispute resolution panel, 3 commissioner of income taxes will be there. If they are given the order, how you can make an appeal again to the same authority? Remember, dispute resolution panel means nothing but 3 commissioner of income taxes will be there. If 3 commissioner of income taxes are given the order or direction to the AO, if SSE is not satisfied with this direction, you can't go with the CIT again. You need to go with the what ma? ITAT. So that's why these are all are appealable, but last one is not appealable before CIT. Next, already we discussed this MCQ. Which one of the following, who cannot be, who no need to file the return of income? In this case, return required to file. Company definitely required to file. Foreign travel expenditure exceeds 4,50,000 required to file. But is a non-resident having the assets or bank account in outside India, no need to file the return of income, not required. Section 54, that is nothing but exemption under section 64 means selling one residential house property and purchasing another residential house property. It is applicable for that individuals or HUFs only. Next, we found the undisclosed income 10 lakh. We have a loss and unabsorbed depreciation. As per section 79A, against the undisclosed income, you can't set off the business losses as well as unabsorbed depreciation. So can you tell me directly what is a tax liability? What is a tax liability? So we can't set off anything directly. 10 lakhs undisclosed income taxable at a 78% under section 115BBE. What is that, 115BBE. What is that? 7,80,000. So now we are paying the some amount to the Instagram for advertising something for our business or profession. Is there any requirement to deduct the equalization levy? No, because it not exceeded the threshold limit of 1 lakh. What is the threshold limit for section 165? 1 lakh. If it is an exceeded the 1 lakh, yes, you can deduct the TDS. Equalization levy. Now, this is also important for MCQ. Section 281B of an Income Tax Act 1961 in collection, recovery and refund we discussed. If the penalty amount is more than 2 crore, okay, definitely risk only for collection of 2 lakh, 2 crores more amount of penalty. Suppose on you, they levied the penalty at the rate of 2.5 crores. Definitely it is an uncertain to collect from you or certain? Uncertain. Now we can apply the concept of provisional attachment in order to protect the department interest. When you can apply the provisional attachment concept, if the penalty amount under section 271 AAD is more than 2 crore, but in our example, how much amount? It is 50 lakh. More than 2 crores only we can apply. Here 50 lakh. That's why, can you tell me, he cannot do provisional attachment. Next, he sold one residential house and purchased the residential house. It is an act of what? Tax planning. Now Beta Limited is selling the goods to the AE at an Indonesia. So now we have to repatriate the amount from them. And we have another AE in Germany also. Now no problem, we can repatriate the amount from the any one of the AE. Ultimately we want to repatriate that amount. We can repatriate that amount from the Indonesian AE or Germany AE only at the option of an SSE, that is advance pricing agreement entered between. Now I want to give you the clarity. This is also incomplete MCQ. Types of advance pricing agreements are there. Types of advance pricing agreements are there. Yes, I will tell you. If taxpayer and tax administrator of the tax administrator in our example CBDT entered, it is called as an unilater APA. Taxpayer, tax administrator of host country, taxpayer, tax administration of host country. Can you tell me host country means? India. Tax administration, foreign tax administration entered. Foreign tax administration, example USA. It is called as an bilateral. And we have a multilateral also. So here taxpayer and host country more than one foreign country. That is on what multilateral APA. So now they are trying to ask the same thing, but they failed to ask. Next, at the time of search we identified the 250 lakh cash, and we have an unabsorbed depreciation. How much of unabsorbed depreciation we can set off? Nil. We can't set off any unabsorbed depreciation. Now they are asking the which one of the following can be treated as P? Opening of a factory in India is treated as what? P. Next, now section 234E, if you are not at all filing the TDS returns properly, every day 200 rupees fees you have to pay. Yes, every day 200 rupees fees you have to pay, but the maximum fees will be 1,20,000. Maximum fees means nothing but amount of TDS. Maximum fees cannot exceed the amount of TDS. Dana. Next, yes, it is also the royalty. Indian company received the royalty from patent. Already I explained. Indian company received the royalty amount from patent developed and registered in India. Now can you tell me what is that amount of we can collect 115 BBF at the rate of 10%. They are asking ignoring such as. Carbon credits next section 115 BBG. 115 what BBG. BBF and this is one and BBG. Yes, that is on carbon credit, same rate 10%. Now here one more amount, one more point. Australian cricketer amount earning some amount from the Indian cricket tournament under which section 195. Maybe you can ask sir why it is 194E is applicable for non-resident sport person, non-resident entertainer, non-resident sport association. For these fellows only we can deduct the TDS under section 194E. The remaining all non-residents are covered under general provision of 195. Next, specified domestic transaction means nothing but if the transactions are entered by the enterprise during the previous year, aggregatedly if it exceeds 20 crore. Now here you can calculate, but I will give the just support. How much amount of an income declared in his return? 0, because he is not filed the return. How much amount identified by the AO under 144, that is an best judgment assessment 18 lakh. What is that amount identified? 18 lakh. Now please let me know what is that under reporting income? 18 lakh is an under reporting income. In case of underreporting, we have to check two things. Underreporting by default. Okay, generally it happened, not intentional. 50% of tax. If it is misreporting, intentionally if you are doing, 200% of tax. First we have to calculate tax. Here nothing mentioned, that's why which section we have to follow for calculating the tax liability? 115 BAC you have to follow for calculating the tax liability. Can you tell me what is that 115 BAC rates? Yes, you can follow and you can apply, and you will get a tax liability. I have an answer. So you will get in 2,39,200 you will get tax. So into 50%, why? It is not intentional, just by default this underreporting done. So that's why you have to take this amount. 50% of that, that's why 1,19,600 under section 270A. Now, under one method, we can't go with the range concept irrespective of the data entries. Even though 20, 30 ALPs also, we have to follow average only. Range concept is not applicable under PSM method. Under profit split up method, can you tell me range concept is not applicable irrespective of the range concept is not applicable irrespective of the data available, irrespective of the data in ALPs. We have to follow always what? Average. Now this is also one small MCQ related to AMT. You have to calculate first as per normal provision. Yes, 8,40,000 into 25%. Why? It never exceeded the 10 crore. 25%, that is an 2,10,000. As per MAT provisions, 18,40,000 book profit into 15%, it is an 2,76,000. What is that? 2,76,000. Please tell me. Ignore surcharge and education cess, whichever is higher, 2,76,000. You have to pay. This is only as an tax minimum. Now already this is a repeated one. Can you tell me, always for calculating the book profit, for net profit we have to do adjustments. So what is the net profit we have to take as per Schedule 3 of Companies Act 2013. Now within how many days we have to repatriate the amount to India? If that primary adjustment is done sumo only, yes, within the 90 days from the return of income due date, if you done the repatriation, no need to do secondary adjustment. Here 94B, so just simple. Here 900 crores loan into 10%, it is a 90 lakh interest. This interest should be restricted with the 30% of EBI TDA. Yes, it is an 150 lakh. So now how much? 45 lakh. Can you tell me how much amount is allowed? 45 lakh. Disallowed also 45 lakh. Now here fails to keep the information and documents under section 92D. What is the penalty? 271 AA. It is on 2% of 5 crore. Yes. Can you calculate 2% of 5 crores means how much? 1 lakh. Sorry, 10 lakh. Oh, somewhat. Which one of the following? It is also repeated one. Which one of the following we can reduce from the book net profit for computing the book profit? Opening the depreciation, unabsorbed depreciation, brought forward loss, whichever is lower as per books of accounts. Next, 800 lakhs towards the income tax in the profit and loss account. But it includes the 40 lakhs surcharge and 8 lakhs health and education cess. But remember, income tax always includes everything. Can you tell me income tax is allowed or disallowed? Disallowed. Entire amount we have to disallow. That is an 800 lakh. It including the health and education cess surcharge. All the income tax components should be disallowed. Income tax, surcharge, health and education cess. These are all the components we have to disallow. Next, we have to discuss the deemed dividend related MCQ. Yes, if any closely held company, if any closely held company is giving the loan to the beneficial owner means who having the shareholding more than 10%, and if this beneficial owner having the substantial interest in any entity, for these things, if any company is given the loan out of accumulated profits, yes, to that extent of accumulated profits, that is treated as deemed dividend. Can you tell me accumulated profits, how much amount is there? 7 lakh. But we given the loan 8.5 lakh. Can you tell me, will it be possible? Okay. But remember, in this we hold at least 10%. That means we are a beneficial owner. Aravind is a beneficial owner in that company, and he taken that interest free loan 8.5 lakh, and accumulated profits as on the date is 7 lakh only. Can you tell me, even though you are receiving the 8.5 lakh as a loan also, to that extent of accumulated profits only, we can treat it as a deemed dividend. Yes, whether this amount is repaid within the time or after the time, these are all the things will not at all affect the treatment of deemed dividend. It is taxable in the hands of the, yes, Aravind under income from other sources. Remember, to that extent of accumulated profits only, even though we are given the loan to these fellows, can you tell me beneficial owner in the entity, if any beneficial owner having the substantial interest for these two persons, if company is given the loan, that is treated as deemed dividend. Now, which one of the following power is not vested in under section 119? So, if you observe the section 119 of Income Tax Act 1961 is given the powers of CBDT, all the powers are there. Yes, there is no power of relaxation relating to set off of losses. Yes, relaxation of provision relating to chapter 6A. Yes, relaxation of time limit for filing of return of income, but which one we don't have provision relating to set off of losses. Next, section 91 deals with the unilateral relief. Income tax twice in more than one country, but in the hands of different taxpayers, it is called as what? Economic double taxation. Which one of the following thing is not applicable? Already we discussed. This is only section 144C. Section 144C, because here 3 commissioner of income tax panel is there. If they are given the order, how we can make an appeal to CIT? Range concept is applied. Can you tell me when we can apply the range concept? If less than 6 ALPs, average, more than or equal to 6 ALPs, range. So that's why option is more than 5 is correct. Now ICDS, last MCQ of an ICMAI booklet. Yes, ICDS related. In this year, government grant received. What is the treatment if grant received related to depreciable capital asset? Yes, in this year, we can follow in the previous year, 23-24, yes, we can reduce it from the actual cost. Reduce it from the actual cost. Now, in this year, July 25 means now it is 24, printing mistake, not printing mistake. Okay, they done mistake, whatever. Okay, previous year 24-25 we are going to refund that. Simply we have to add to the actual cost or WDV. Actual cost or what? WDV. So now if you added this, automatically value of the block will increase. Now they are asking what is the consequence? Yes, now whatever the revised value is there, we have to calculate depreciation prospectively. Are your accounting standard treatment also same? Accounting standard, yes, 12 also saying the same way. Now ICDS, yes, 7 also saying the same, not 8, 7. ICDS 7 also saying the same. Okay, that is only that easy answer you can find. It will be allowed. That means nothing but which one will be allowed? Depreciation will be allowed from the resultant value from the, yes, previous year 24-25, yes, related assessment year 25-26 onwards. What is the correct answer? The depreciation will be allowed prospectively on the resultant value. What is the resultant value? After adding the government grant refund related. So these are the things from my side, and now I want to discuss the 4 MTPs related MCQs. What are the 4 MTPs? Yes, I will tell you. June 2024 MTP1, June 2024 MTP2 or MQP also, not 24, sorry, 25. December 25 MTP1 and December 2025 MTP2 and June 25 question paper. Okay, if you have an energy, I will continue with a 10 minutes break. Otherwise, we can continue tomorrow. It's your option. Tomorrow, Nikki. Ma, these are the things I want to discuss. Shall we discuss one by one quickly, ma? Okay, now I will download. We'll start with the June 25 things, ma. Tomorrow, akka, already I told. I think all are overthinking only. There is no much things we have to discuss with 94B. Okay, but no problem. I will try to come. Okay, so first we can start with the June 25 MTP 1. Why we need an answers? June 25 MTP set 1, mostly repeated MCQs will be there. We can ignore the repeated MCQs quickly. Yes, first one. Ram won a lottery after TDS 14 lakh. So this is a net amount. Please tell me gross amount. That is nothing but 14 into 100 divided by 70 is 20 lakh. How much? 20 lakh. Now he has spent in 60,000 for purchase of lottery tickets. Can you tell me? Can I take this amount of a deduction? No. Entire amount is flat taxable. Now what is that amount chargeable to tax in his hands? Yes, you have to show the grossing up. In your hands, what is that amount you have to show? Grossing up. That's why answer is 20 lakh, not 14 lakh. Many students can tick the 20 lakh, sorry, 14 lakh. That is wrong. Why? Under income from other sources, what is the taxable? Gross amount 20 lakh. We purchase at the car for personal purpose, but we are charging that expenditure as a business expenditure. It is called as what? Tax evasion. Now it is an 80GG chapter 6A deductions. Now remember, 80GG is allowed as a deduction lower of the following. First one, 5,000 per month, that is nothing but 60,000 in this case. Second one, rent paid minus 10% of adjusted total income, that is an ATI. What is that adjusted total income? Clearly they are given total income before claiming this chapter 6A deduction. In this case, all the chapter 6A deductions you can reduce. Before 80GG, it is only adjusted total income. It is only what? Adjusted total income. Now please calculate the rent paid. Rent paid is nothing but 12,000 per month. Per annum it is an 1,44,000. 12,000 into 12. 1,44,000. Are please compare answers with the key. I don't have. 1,44,000 minus 10% of adjusted total income means what, ma? 46,000. Next, see, 25% of adjusted total income. Can you tell me what is the 25% of adjusted total income? 1,46,000 into 25%, 30. No, 36. 4,60,000. 4,60,000 into 25%, it is an 1,15,000. Ma, whichever is lower, whichever is lower, 60,000. Answer is 60,000. Next, normally MAT rate is 15. If that company is located in IFSC, International Financial Service Center, that MAT rate is 9%. MAT rate is 9%. Already we discussed, it is a repeated MCQ. Yes, for that companies we have to appoint, if any person appointed as a liquidator, we have to intimate to the income tax authorities, and we have to sell the asset. At the time of selling also we have to take a permission from the income tax authorities. Now what is that maximum surcharge rate we have to levy on the capital gain, that to long term capital gain of 15%. And refer in capital gain chapter I uploaded the remember on capital gain on dividend income, maximum surcharge tax rate is nothing but what, maximum surcharge rate 15%, and that computations also I uploaded in the capital gain chapter. So nothing but capital gain chapter, if you refer the concept book, the theory is there. We can expect one MCQ also from this. Next, they given the jewelry worth, this one, that is also undisclosed amount. 26,60,000 is there, and including surcharge and all the things, what is the tax liability? 26,60,000 into 78%, it is nothing but 20,74,800. In which case we have to quote our PAN number. In return of income we discussed, in this case, I think this is an correct answer. For payment exceeding the 50,000 for purchasing the mutual fund units, that is an correct one. Next one, this is also controversy MCQ, but ICAI and just I will add, if I am not adding this word, you will feel ICAI taken the stand and ICMA copying the stand. So now but in our books also, in ICAI books also, they are excluding the, so nothing but if any company is engaged in the business of manufacturing and biotechnology, if they are incurring any expenditure on in-house, remember they are excluding the land and building, remaining is available. Nothing but 8 lakh and 5 lakh only available. But ICAI taken the one stand, building is available. But to be honest, if you are reading the plain provision of the section 35, only available is what, other than land and building. But now ICAI I taken the one stand. Can you tell me what is that? Now this 12 lakh is also available. Now what are the available things? 12 lakh plus 8 lakh plus 5 lakh. This is then 25 other than cost of land. So in exam also you have to keep this, but remember, if you are reading the plain reading of the provision, in earlier attempts also I taken this MCQ but that is wrong. But no problem, you have to keep this answer of 25 lakh only. But if you follow that section, they are saying other than land and building is allowed, but please only exclude land, other these are allowed. Arm's length price computation related methods are given in 92C, and next 92D records we have to maintain for the 8 assessment years. Next, how much amount of the 94B amount, nothing but interest deduction 30% of EBI TDA. If you are failure to maintain the records under 92D, what is the penalty under section 271AA? 2% of the international transaction or specified domestic transaction. Primary adjustment is done only when if it is more than 1 CR or 100 lakhs, then only we have to do secondary adjustment. Berry ratio means gross profit divided by what? Operating expenses. That's end with the MTP1 relating to June attempt. Now we have to take the MTP2 relating to June 2025. repeated MCQs only, we can quickly close within 10 minutes. Simply it is a marginal relief question. Sir, how you know marginal relief? Because for an individual, basic limit for surcharge is 50 lakh, 1 crore, 2 crore, 5 crore. Here SSC opted out from default means nothing but SSC is following the normal. And here you have to carefully take 65 means non-resident, basic exemption limit still 2 lakh. Please calculate the, still 2.5 lakh. Please calculate the marginal relief. Yes, then only you will get an answer. Yes, I think I don't know answer. You can calculate and compare with the key. Here you have to calculate first step, tax on total income including tax on total income including surcharge. Step 2, tax on basic limit including surcharge plus extra value 1 lakh. Step 1 is more than step 2, then you will get a marginal relief. Step 3, yes, in step 4 you can calculate the, yes, whatever the step 1 minus step 3, you will get a tax liability. Next, capital gain they are asking, it is an important thing. Purchase date and the sale date. Where is sale date? Sale date. Sale date is before 23 7 2024. Means we have to take that for immovable property, period of holding 24 months more is there long term, otherwise short term. In this case it is a short term capital asset. First you have to observe that, otherwise we don't know. My immovable properties period of holding 24 months. But can you tell me whether we hold 24 months, June 22 to March 24. 24 months not completed, that's a short term. Capital gain also short term capital gain. Sale value 25 lakh. Sale value 25 lakh minus purchases 10 lakh. Improvements related 3 lakh. How much? This is an amount, yes, 20 minus 10 minus 3, yes, 7, 25 minus 10 minus 3, 12 lakh. And can I take the 54 exemption? No, 54 exemption is available only in case of long term capital asset is selling. So that's why there is no exemption. Yes, this is only answer. Same MCQ we discussed. Property dealer selling the property to the one friend. So now which income will attract? Business income. Opposite person hands, can you tell me which income will attract? Income from other sources. That's why this answer might be correct. Please check. Already we discussed the same MCQ in our MCQ booklet issued by the ICMAI. Property dealer selling the one thing, if any profit he got, business income. And in the opposite person hands, we are selling less than the fair market stamp duty value. Okay, we can check. We can check for how much amount we are selling. Mr. J is selling 2.25 crores. 2.5 crores. Can you tell me what is the benefit in the hands of the purchaser? 25 lakh. That is taxable in income from other sources. Option C is correct. Done. Next, which form number? It is also repeated one, 29B. If MAT is applicable, CA report we have to submit in 29B. Can you tell me which of the following returns we can revise? Every return we can revise. It is also repeated one. Advance ruling provisions 245 N to 245B. Next, this is also repeated one. If any amount of penalty is levying more than 5 lakh, definitely in order to give the waiver or reducing, we have to take the permission from these authorities. If that amount is less than 5 lakh, directly they can pass the order. Who can pass the order? PCIT is CIT. In the restructuring cases, yes, we have to apportion the depreciation between the predecessor and successor based on the number of days. Now, this is an important. Yes, important. Okay, salaried employee paid the brokerage to the Sudeep on this date. Can you tell me? Brokerage paid. 194H applicable? No. 194H is applicable in case of other than individual or HF. Individual or HF turnover or gross receipts more than 1 crore or 50 lakh. But is a salaried individual. 194H not applicable. Sir, then shall we check the for 194C, for 194H, for 194J, if not applicable, if you are not covered as an payer, you have to check what 194M. Can I check 194M? Yes. But still 194M also not applicable for the Subarta. Why? 50 lakh threshold limit under 194M. So that means for Miss S, TDS is not required. Okay, then what about Bima? Bima is paying is also retired pensioner, Bima. He is also paying the different amounts, 23 lakh, multiple amounts, he paid 3 amounts. For contractor, can you tell me? 194C is applicable for Bima? No. Why? 194C is applicable for individual HUF. Other than individual or HF, for individual or HF, it is applicable if the turnover or gross exceeds 1 crore or 50 lakh. Now 194M applicable? Yes, applicable. Why? If you are aggregatedly during that previous year, it exceeds the 50 lakh. So can you tell me, Bima required to deduct the TDS, but they are not mentioned the section? Yes, we are also quickly escape. 94B, what is the percentage of EBA TDA restriction? 30%. Now, nothing but sumo only done the primary adjustment. Now within how many days we have to repatriate that amount? Within 90 days from the due date under section 139(1). What is the secondary adjustment interest rate by additional income tax rate? 20.9664. In order to escape the secondary adjustment, yes, you can escape. You can pay the additional income tax at the rate of 20.9664. Opening of a factory is treated as what? P. Remaining is not treated as P. Which one of the following is not a transaction based method? What is that? PSM, profit split method. Now here resale price method, price charged in a normal transaction is 4 lakh minus if you are taking the gross profit margin, it is a normal, and purchase related expenditure please take 4,000. Yes, purchase related expenditure please reduce 4,000. Finally you will get in 4 lakh minus 30% minus 4,000, sorry, 2,76,000 is an ALP. Done, all of you? Done. Yes. As of now, we discussed the June attempt related to MTPs. Now, shall we forward towards the December attempt? Most repeatedly, we can get these MCQs. We can go for December. These are all repeated MCQs only in every attempt they are going to give. Okay, now. Okay. Company is required to furnish the return in the form number 3 CEB. What is the due date? 30th November. Form required to file the return. So not form, trust. Under section 12AA of Income Tax Act 1961, but they failed to file the return within the due date. Now, what is the quantum of penalty? For trust itself, they are given the specific section, I think 272. I will check. 272. I think A or E, some points are there. Wait a minute. 272A subsection 2 class E, that is saying everyday default related 500 they are required to pay. Next, long term capital gain is there, and long term capital loss is also there, but we can set off against this only 85,000. So now 11,000 you have to carry forward to the next year. Why? We can't set off the long term capital gain with the short term capital loss. Okay, it is exhausted and it is on finally 0. Now we have an short term capital loss also. Yes, we can adjust. minus 42,000. Yes, it is also exhausted. Okay, now what is that final ma? 1,75,000 minus 42,000, 1,33,000. Remember, long term capital gain can be used for set off of long term capital loss. Yes, that means if you have a long term capital loss, that can be set off only against long term capital gain. But short term capital loss, yes, can use long term capital gain also, short term capital gain also. Next, my application under section, what is that? Application under section 154. Yes, within how many months they need to give an order or rectification order related also, or they can reject this application also from the month end in which that application received within 6 months. Now we discussed the same thing, ma 12 lakh related, ma 12 lakh related, 144 assessment is done, he is not filed the return of income. Yes, now here they are not mentioned anything, nothing but 115 BAC is following the. Now you can calculate tax first. Okay, if you calculated tax, that is an 83,200 into 50%. Yes, because it is an under reporting by default, so that's why option B is correct. If it is a misreporting, you can apply 200% ma. Joint Commissioner of Income Tax is an first income tax appellate authority. Ma understood, 270A means under reporting. By default means 50%. Intentionally if done, that is a misreporting, 200% of tax you can apply. ICDS is applicable for the PCBP or income from other source. Yes, Block Money Act is applicable for whole of India including Jammu and Kashmir. Nothing but this is a definition related to slum sale. We are selling as an undertaking without assigning the values to the individual asset. Nothing but we are selling entire undertaking for lump sum consideration. Within that lump sum consideration, we are not assigning any values to the individual asset. Next, provisions of section 92 will apply. Yes, can you tell me if any specified domestic transaction as per section 92 BA, if the value of the transaction exceeds 20 crore, advance pricing agreement is consecutively valid for 5 years. Next, this MCQ already we discussed under section 94 BMA. Yes, under DTAA, nothing but which model of India will always follow ma? UN model will follow. And remember one thing, it is a very important and unique MCQ they are given. In our UN model of an DTAA, how many chapters are there? 7 chapters. How many articles? Now I will tell you. Ma, we have an UN model and OECD model. UN model, how many chapters ma? 7 chapters. Here also 7 chapters only. Articles are how many? Articles means how many points they conveyed in that each and every model. UN model 31, this is an 32. Important for this attempt they are asking. Yes, in our study material we have. Now answer is 31. My UN model related articles 31 and OECD related 32 articles. GAAR provision is applicable if that shall not apply if that tax benefit arising in such a transaction it does not exceed 300 crores. There is an MTP1 relating to our attempt. Which attempt? December attempt. MTP2 also repeated MCQs only mostly you can get. Because if you learn nearly 100 to 200 MCQs, the remaining MCQs will be always repeated even in your examination also. Now, I think you know agricultural income. In our PCBP we discussed about agricultural income also. Remember, if any person engaged in all these things, what is that? Agricultural income proportion ma 60%. And what is that? Business income related ma 40%. So 3,60,000 is an agricultural income. 2,40,000 is itself yes, just business income. Okay, it is just below the basic exemption limit, that's why no need to pay any tax. Yes, nothing but refund amount 244 year repeated. Interest nothing but what is the rate? 0.5% per month or part of the month. Nothing but MAT related rate they are asking. What is that MAT rate of 15%? What is that MAT rate of 50%? Sorry. What is the MAT rate? 15%. Next, can you tell me it is an memorandum of cross objections related form number 36A within how many days? 30 days. Next MCQ. This is also repeated MCQ. Can you tell me if PCIT or CIT want to give the reduction of penalty or waiver of penalty, can you tell me what is the limit of penalty mentioned in that order? 5 lakh. More than 5 lakh, if then they have to take a prior approval from higher authority. Credit note issued. Yes sir, nothing but wrong value related credit notes issued with the intention of tax evasion only they are doing such things. So nothing but they are giving the credit notes with the wrong amounts in order to reduce the total income of companies. So ICDS is applicable for PCBP. Next, block money rate 30%. Now 50B, can you tell me in case of slum sale, what is the cost of acquisition we have to take? Net worth of an undertaking we have to take. What is that? We have to take the net worth of undertaking. Instead of the cost of acquisition, we have to take the net worth of undertaking. Here they are asking the ALP price charged in comparable uncontrollable transaction. How much? 15,000. Okay, cup method, price charged in comparable uncontrollable transaction. Next, what is that warranty? Yes, we have to remove the warranty. 2,000. Yes, this is only 13,000 ALP. You can do this MCQ easily because always in cup method we have to take the base as an price charged in comparable uncontrollable transaction. How much? 15,000. For this we have to do the functional adjustment. Ultimately we can get the ALP. Now API is valid for how many years? 5 years. 92 CE. Can you tell me if amount is not repatriated within 90 days, then only we have to do the secondary adjustment? Means nothing but we have to calculate the interest. In order to escape this interest, you have to pay the additional income tax. Additional income tax. Next, main purpose of DTAA to avoid the double taxation of the same income. OECD model is developed nations purpose created. Objective of GAAR is nothing but prevent the aggressive tax avoidances. Can you tell me for between the developing nations UN model? Now we have to discuss the last part in today's MCQ session. Last part, that is nothing but past question paper, that is June 25. These MCQs quite some repeated already, you know. Yes ma'am. CIT given the order, but we are not satisfied with the order. What is the remedy available with us? We can file an appeal to ITIT. We can file an appeal to ITIT within 2 months. After amendment 2 months, not 60 days. Before amendment 60 days. However, they are asking the company MAT rate of 15%. This is only we discuss section 272A. I think now only we discuss trust is not filed the return of income within the due date. Every day they have to pay the 500 rupees. That is nothing but 272. I don't know. I didn't remember also. Section number. Okay. 272A subsection 2 clause E. Even though return is filed beyond the due date also, which thing we can carry forward? Unabsorbed depreciation. Now it is an under reporting related MCQ. Can you tell me how much under reporting? Please calculate what is that under reporting income in this example. Can you tell me 20 lakh is under reporting? Remember, this is only the students can commit the mistake. Under reporting income 20 lakh because, yes sir, first you declare the earlier 12 lakh. Now, can you tell me misreporting income itself 20 means nothing but what my entire income 20 lakh is under reporting. Maybe students can find out the difference and they can say, yes sir, 8 lakh only. No. First you declared 12 lakh. After that, if they are done, misreported income itself, that is an underreporting income only. Ma, first please calculate tax. How you can calculate tax, ma? 20 lakh plus 10 lakh related tax, ma. Here partnership firm, you can apply the tax rate including health and education cess. You will get a 9,98,400 less tax on what, ma? 12 lakh. Nothing but now what is that amount you have to pay? This is 12 lakhs, sorry. On which amount? First, what is the total amount after finding out under reporting income? Previously, what is that? 12 lakh. So, how much, ma? 3,74,400. Now, 6,24,000. It is an tax on under reporting amount. Tax on under reporting amount. But remember, what is the percentage we have to apply? Misrepresenting means what? 200%. That is an 12,48,000. My students can apply the under reporting income directly, sir. We can apply 30% and plus 4%. No. There is a procedure for computing the tax on under reporting income. First, tax on income assessed earlier. Now misreporting income. That is 32. Income assessed earlier. There is steps in computing the tax on under reporting. Students can apply, sir, I want to apply 30% on this, sir, and directly I want to apply 4%. No. That is cannot give the accurate answer. Okay, in this case, maybe you will get 20 lakh into, yes, sir, 30% plus 4%. Yes, you will get in this case, but not on all other cases. But remember, first always, now what is a misreporting? Income assessed earlier. First calculate. From the tax liability, please reduce what is the tax on income assessed earlier. Next, it is an income from other sources MCQ. In DTAA chapter, we discussed also. But remember, what is the dividend income you earned from the domestic companies? 6,60,000. Is there any deduction available? Yes. For making such investment, you taken a loan. On that loan, you paid interest. On that loan, you paid interest. Now, deduction you can claim. Can you tell me what is that amount of deduction you can claim? Yes, suppose what is that loan you taken 20 lakh, interest you paid 2.2 lakh, 2,20,000 you paid, but I can't give the 2,20,000 and 20% is of your dividend amount, whichever is lower. Ma, I am restricting your interest amount with the 20% of dividend amount. Ma, what is that? Whichever is lower, ma, 1,32,000. After removing this deduction, what is the taxable? 5,28,000. Again, I am expecting this MCQ in our exam. Remember, if any dividend amount you received, that is not at all fully taxable. If the dividend amount related, if you are taken, that means you are investing in one company. For such investment, you taken a loan. On that loan, if you paid any interest, that interest is allowed as deduction. But full amount are restricted with the 20% of dividend amount, restricted with the 20% of dividend amount. Now, here, what is the time limit for service of notice? Nothing but return filed year ending. Can you tell me 31st March 2025 within 3 months? Yes, that is on 30th 6 2025. 30th 6 2025. Next, it is on 44 AD. They are asking just presumptive income. How much we generated? 105 lakh. Out of that 105 lakh, 55 lakh is into 6%. Now 50 lakh into 8%. Why? 50 lakh is nothing but in electronic modes. The remaining balance is in cash. Yes, totally if you are computed the presumptive income, how much it will be? 7,30,000. Now block period they are asking. Yes, nothing but what? Block period they are asking. Simply block period means nothing but, yes, can you tell me such year before how many years? 6 years. Can you tell me? Yes, how many years? 6 years. Now can you tell me such initiated in which year? Previous year 24 25. Before that, can you tell me how many? 1 2 3 4 5 6. That only no, we have to add first day of the previous year to conclusion of the search. First day of the previous year to what was initiation or conclusion? Conclusion of the search. Next, this is a very important MCQ. They are asking in which of the following companies is resident. Ma, can you tell me company residential status? Ma, domestic company always resident ra. Domestic company is always resident. But foreign company residential status is depending upon poem. Yes, clearly here they are not giving anything. Foreign company branch only they are given, so it is a non-resident only. They are not giving anything about poem. But here place of effective management is wholly in India. Foreign company place of effective management is in India. No, it is also non-resident. Sir, why? Ma, in 2017-18 ra, there is one big notification, miscellaneous notification. Worst fellows are asking this. Poem concept is not applicable. Poem concept is not applicable if that company's turnover is rupees 50 crore or less in that year. Now here 50 crore less, that's why poem concept is not applicable. Poem concept is not applicable if their turnover is less than 50 crore. Now poem concept is not applicable means non-resident. Here wholly outside India, non-resident, that's why answer is none. Understood? Many are saying that sir, poem in India. Array, who can remember the notification in 17-18 ra? They tested in the last attempt. In our material they are not given. That is an highlight. In our ICMA material they are not given this notification also. At least if they are given, okay, like any faculty also can summarize that circular or notification. They are not given. For that explanation of this answer, we taken this from ICMA material. Okay, super. Ma, here non-resident Indian citizen gross dividend is there. Sorry. 50 lakh non-resident Indian citizen is a gross dividend purchased on convertible but Indian citizen. Okay, nothing but NRA provision is nothing but what ma 20%. This is a partnership from paying the amount non-resident related 195. GAAR provisions 3 crores. Ma, it is also you have to remember 115 AD. TDS provision, no TDS with respect to capital gain. Here they are given the capital gain. What is the TDS amount we have to deduct? No need to deduct the TDS amount with respect to 115 AD related. No need to deduct the TDS if that income is paid by the FIIA to the whoever investors. There is no requirement to pay the. There is no requirement to deduct the TDS with respect to the capital gain amount. On remaining interest and securities related, yes, we have to pay. What is the additional income tax? 20.9664. Now, final conclusion I want to tell you from my side. Okay, already your preparation is done. I don't want to comment anything. Previously I given the MCQ revision series. In that, almost 400 MCQs I covered. Now, okay, some students are bothered about the new MCQs, whatever given. Okay, 10 to 20 MCQs are new only in this. So now, in this new video, I covered the what are the MCQs? ICMA booklet. Yes, sir. ICMAI booklet. Next, June 25 question paper plus MTP, and December 25 MTP, not question paper. I don't know question paper till now. Yes, if you cover all this, definitely you will get 24 plus only. Coverage means don't buy hatra. Background concept you have to know. From MCQs you will get an 24 plus marks. Thank you. Have a nice day. Available in institute website. Yes, you can download. So from my side, whatever the materials are required, I already uploaded in our website under free resources. You can check. And in and one more thing, sir, what are the remaining videos from your side? So don't wait for these videos, right? In my free time, if my health permit, I will do these videos. One is 94B related, another one NRI related, third one, okay, ICDS, and last one paper presentation. Don't wait for me and continue your preparation. Yes, I will come up with a live and I don't want to take much time. Yes, everything 15 minutes only I want to take because already revision done. Okay, just I will come and I will put a video on YouTube. Don't wait for these things and start your preparation with your other subjects also. And thank you. All the best.